Here's to a mild autumn and clear roads across the U.S. from the Allen Lund Company.
And welcome to Trucking with OIDA. I'm Scott Thompson.
And I'm Ashley Blackford.
Ashley, how's it going today?
Good. How are you?
I'm doing just fantastic.
Wonderful.
And we are going to be speaking here in a moment with Carter Vieth. He's a research analyst for ACT Research, and they do research there.
Believe it or not.
As the name implies. They've been doing a lot of research recently on rates and what the market is looking like out there. Newsflash, it doesn't look great.
Nope.
We are in full swing of shipping season right now. Things are not going as well as a lot of people would hope.
Mm-hmm.
So Carter's going to talk to us about that and what he's seeing out there and potentially maybe a glimmer of hope in 2026.
Let's hope.
We keep looking for
A
these.
light at the end of the tunnel?
Sure, we'll go with
A
that.
long tunnel.
Cloud, the silver lining? No, I think we're mixing our metaphors.
You're gone.
Anyway,
Yeah.
all right.
You're done.
We're done. Well, on that note, I guess we'll turn it over to Carter Vieth. Well, Carter, we appreciate you talking with us. Always have a lot to talk to you about when we talk to you. Can we just start with a general question? How are things looking out there in the market? We've been in not such a great place for a while now. How are things looking right now?
Yeah, I think, we're kind of nearing year 4 of this downturn. And I think, kind of currently we're still in this, holding pattern, kind of seeing, with tariffs, kind of pull forward demand, rates were up a little bit in September, shipments were up a little bit, but then, in October, kind of started to come back down or kind of give up some of those gains. Then, also with the tariffs, kind of have this kind of demand kind of softness into Q4 and kind of in Q1 as we, kind of that payback period from all the pull forward kind of roosts. So, it's, I think there's good news, as we get into 2026, but, I think the bad news is, we have to get to 2026, we still have to kind of, carriers, fleets still have to deal with this down market for, another, 6 months or so before they start to see any, kind of relief, at least, from our view, kind of that's where we kind of find things, at least on the fleet side. And then, if we look at the industry, kind of OEMs, they're all cutting production, retail sales are falling, orders are below replacement, which is, necessary, for that, supply side, to start to tighten. But, that all takes time to work through the kind of the system.
Yeah. Can we focus on maybe the good news? We'll get to the bad news, and I kind of want to drill into some of the things that you talked about there. But the one thing that maybe we can kind of hope for, latch onto if we're looking for some hope out there, this good news that you're seeing, in 2026, where is that coming from? Is it cautious optimism, or are you actually hearing or seeing something out there that makes you think, hey, we maybe are about to turn a corner here? Is there something like that out there?
Yeah, so I think maybe, I think on the demand side, I think there is this period of softness as we kind of, deal with that kind of the payback, from the pull forward with tariffs. But, I think, the recent Supreme Court, they haven't ruled on it officially, but they seem to, have a pretty dismissive view of the IEEPA, reciprocal tariffs. So if those get repealed, that's good for goods demand, lowers inflation, I think, helps a lot of carriers out on the volume side. The economy is still growing. I don't think anybody out there is forecasting a recession. That's good news. There's certainly, kind of softness in housing or, kind of manufacturing has been a little kind of neutral to sluggish. But, if interest rates are a little lower, the economy continues to grow, consumers, face less inflationary pressure, if the tariffs repeal. I think on the volume side, that's a positive into 2026. On the supply side, I think the main reason, this downturn has lasted so long is, in, kind of February, 22, when, the spot rates started to drop. Contract rates, follow 6 months later, is, at the same time that the for-hire market was, entering, a downturn, you had this surge of, private fleet buying. So, private fleets, we estimate roughly 5% market share from the for-hire market, and they were adding capacity into an already loose, bad market for hire, and also took away freight from, from for-hire carriers. So, that really exacerbated, the current downturn, and I think is really the key reason why it's lasted so long. But, now we're starting to see, private fleets slow growth. A lot of them lease their fleets, on 4 to 5 year kind of contracts. Those are starting to come up, and I think private fleets, their average driver pay is like $80,000 or $90,000. They have the insurance costs, the increased exposure to liability. So I think all of that leads them to conclude, hey, we should go back to carriers. They're in quotations so cheap right now.
Mm-hmm.
So I think a lot of those kind of factors as we kind of work our way into 2026. Q1 is always kind of a soft quarter for freight, but I think as we get into Q2, Q3, we'll start to see some improvement in the spot market.
Do you mind touching on capacity? Are we seeing any shrinkage there?
Yeah, so I think, if you look at like DOT operating data, it would actually almost be like neutral, flat. But, I think, as we talk about on, kind of the private fleets, they're starting to exit, and we get monthly data from the OEMs for, orders, build, retail, sales. The industry, in the second half of this year, they finally started, building below replacement levels for the first time in 3 years. Orders are now below replacement level. Retail sales are now below replacement levels. So, I think in the kind of back half of 2025, the tractor population, kind of active tractor population, is going to shrink by 1%, and then by another kind of like 4 to 5% over the next 2 years, based on our forecast. And that'll help with supply, tighten that, and then if we get that kind of demand bump in 26, volumes returning back to kind of the for hire market. That's our working theory, anyways.
Yeah. Yeah, it's interesting too, when we look at overcapacity and the role that's played in everything that we're seeing out there. We've also seen in recent months, enforcement with English language proficiency and, this whole non-domiciled CDL issue as well. Have you seen any effect on that out there? Because I know there is a thought or belief or hope, I suppose, among a lot of people that is going to help matters out there. Are you seeing any signs of that at all?
With the market the way it is right now, we're not seeing much. Just like if you're a carrier, for hire carrier, you really don't need a driver right now. Your margins are already so low. It's hard to get a return on your asset or your investment, or your volumes are down, so you just don't need as many drivers. I certainly think at the margins it'll help when the market starts to turn. I do think people right now, it does seem like a lot of wishful thinking that it's this kind of silver bullet that will kind of solve kind of the current market's woes. But I do think there's something there. There's a there.
Mm-hmm.
At least on the non-domicile side. I think the 200,000 that Sean Duffy gave out. I think that's a little high. There's 1.7 million. In our view, 1.7 million active tractors on the highway right now. And the 200,000, that's 12% of the market, which seems a little high. And we also don't know, how many of these people are still in the U.S., how many people are still actively driving. So I think maybe like 50 to 100,000 might be, I think, a better number or a better gauge. I think with the kind of English language proficiency, I think, that's always been on the books in some way. It's just more about the enforcement.
Right.
But that's tricky. It's like, how do states enforce it? How do you judge what's proficient. And I think people also discount, people's ability to learn English. If they're going to start enforcing it, in a stricter way. So I think certainly at the margins it helps, but I don't view it as something that really shifts the market, especially kind of as we're kind of trudging along the bottom right now.
At Truck Stop, we built a better load board for carriers like you. Sign up today and access over 600,000 loads on the most trusted online load board. Learn why the best in the business rely on Truck Stop to make more money and start driving your profit today.
Penske is the trusted source for quality used trucks. Whether you search our website, call our sales staff, or bid at our online auction, you are sure to find the right used truck for your business. Visit PenskeUsedTrucks.com to view our inventory and learn more.
House Products provides your diesel with total performance and protection. Use Diesel Defender for a full system cleaning. Start treatment early with Diesel Treat to prevent gelling all season. And protect yourself from winter emergencies with Diesel Lifeline. Stay moving with House.
Attention all truckers, Dean Michael, the tax doctor here. I want to talk to you about those dreaded tax problems. I know you want to keep on trucking and not even think about them, but let's face it, they're not going away all on their own. You need professional help. I've been helping truckers put their tax problems in the rearview mirror for years. I can help you too. Call me now for a free consultation at 888-557-4020 or go to mytaxhelpmd.com. It's like I always say, keep your eyes on the road, I'll keep mine on the IRS. 888-557-4020.
Truckers, your engine works as hard as you do. Don't let torsional vibrations sideline your rig. Vibrotech TVD viscous dampers protect your crankshaft, cut downtime, and keep you earning mile after mile. Over 75 years of trusted protection made in the USA. Find a dealer at vibrotechtvd.com.
Since you started, what you've loved about trucking is the freedom. Heading out on your favorite route, a good driving song, and thinking about truck insurance. Well, maybe not that last one. That's why we're here. At OOIDA, we have a full range of truck insurance products, expert advice, and great customer service, helping you get the right coverage for your operation. Go to OOIDA.com, because your job is to drive. Our job is to help with everything else.
Something that has, I think, shifted the market, and I think that's safe to say, and you mentioned it earlier, we would be remiss if we didn't talk about tariffs. And you did allude to the fact that the Supreme Court is kind of, looking at the Trump administration's powers on this. Is there going to be a rollback? That's going to cause a whole host of other issues if the Supreme Court does end up kind of going that route. But that is kind of the cloud over everything we're talking about, right? Because the tariffs have had an effect. I don't think anybody can dispute that on what we thought was going to be a stronger freight recovery. What are you seeing out there? Is it just, again, we've talked about this so many times, but is the uncertainty still out there? Is that still having an effect on anything or everything you're seeing right now? Yeah,
no, the uncertainty, still. It's almost like, kind of like a spirit. It kind of like haunts, it continues to haunt the industry.
Yeah.
But I do think sort of the kind of, the recent sort of hearing on the case, I think there's, more optimism in the industry kind of regarding, kind of the reciprocal tariffs at least going away. And then, the ATA, they put out a recent statement earlier this week, that the EPA seems likely to, regarding EPA 27, it seems like the EPA is going to repeal the extended warranty cost. So, the emission standards will remain. But, that was also another kind of piece of that uncertainty was, nobody knew what the regulation beginning January 2027 was going to be. So I think, those two things will certainly alleviate, kind of, any uncertainty and make it, easier to make business decisions and plan. But that said, you still have the 232 tariffs on the supply side.
Yeah.
So tractors, I think the price increase this year has been 5 or 6%, so about $8,000 to $10,000. Even if you get rid of the extended warranty, the cost of the new kind of regulations in 2027 $8,000 to $10,000. So you still in 2 years have increased the price of a tractor by $20,000, which isn't nothing, especially when fleets, margins are maybe at 100 OR or above. So it still is a lot, a lot to deal with. A lot going on for kind of these owners and kind of operators in the market.
Yeah, for sure. Yeah.
We're now in that time of year when seasonal demand typically picks up. We've been hearing concerns that this year's surge might not measure up to previous years. How does what you're seeing now compare to a typical year?
Yeah, so I think, fortunate enough, I get to talk to a lot of, large truck and trailer lessors as part of my job, kind of on a monthly, quarterly basis. And across the board, all of them have said in, no uncertain terms, they are seeing zero kind of holiday demand for their equipment, where, usually, a UPS or a FedEx would take, 5,000 trailers or, a couple thousand tractors. They are seeing zero demand this year for that.
Zero demand? Zero.
Yeah, zero.
A big goose egg.
Wow.
Yeah, they are not taking anything. And then, if we look at, we have, data from DAT, some of their busier lanes, we kind of aggregate and then, track the shipments there. So in September, there was this huge surge ahead of, kind of tariff deadlines, the shipments and, those really dense lanes rose 15% in September, but then fell 7% in October. November, we'll find out, but, I certainly think it's going to be more muted. Consumers, a lot of them, pre-bought, big items like furniture, cars, a lot of inflation worries, credit worries, auto loan worries. So I think, the consumer is pretty wary right now. And, again, just that surge in demand, kind of the rolling pre-buys kind of throughout the first half of this year, have given way to this kind of soft, kind of holiday period.
That's got to be concerning for the folks you're talking to. Are you sensing just from them a lot of worry, concern about that? I mean, I assume that they are.
Yeah, definitely a lot of worry. I think their thinking is if we can get through Q4, we'll be good. I think a lot of them, I don't know if it's hopeful optimism or cautious optimism, kind of see 2026, as an improvement. I think sometimes the thinking is just it's been bad for so long, it has to get better at some point, which is true. But especially, kind of to counterbalance that, as maybe it's seasonally soft. If private fleets are giving market share back to for-hire fleets, even if demand isn't growing, that is putting a little bit more freight onto for-hire carriers. So, there's some of that too. So it's not going to be, just all bad. If I could have, some optimism.
Well, I'll be a wet blanket if you want to counterbalance, because I was just thinking, literally when you were talking there, I was thinking a year ago around this time, I think we were, maybe not with you, but we were having some of the same conversations with people who kind of had the same thought that, hey, we're going on year 3 of this freight recession. A bounce back is coming. And it didn't. And again, there's a lot of outside forces, I think, that are kind of at play here that are having an impact. But when you talk about cautious optimism or hopeful optimism, I guess the skeptic in me or the cynic in me is thinking, how is this any different from where we were last year? But you are seeing some things. Again, I'll try to get back to the good news, I guess. But you are seeing some things that tell you maybe 2026 is going to pick up a little bit. And I guess maybe we should hang on to that if we can.
Yeah, I mean, I think our thinking this time last year was the economy was growing strong. I think January of the beginning of January of this year. Kind of in our office, the debate was, does GDP grow 2% or 2.5% this year? I think, economy is still growing, but, just really it was tariffs that solely kind of, blew up this year of recovery just because it changed, tariffs don't change demand, as a whole on the aggregate. It just changes the timing. And, when tariffs were first announced in April, it was a ton of chaos, ton of uncertainty. We also saw retail sales for Class 8 tractors kind of start to tick back up as people, trying to pre-buy, get ahead of equipment cost increases, which, when, sales go above replacement, they're adding to the population, adding to capacity, not taking it away. So now we're in a point where, while we have capacity coming out, demand is softening. So it's like they're counterbalancing each other in a way. It's like, the capacity coming out kind of sets a floor, but with demand softening, it's not going to, rise anywhere. But I think, into next year, if we have the tariffs go away, at least the reciprocal tariffs go away, that's positive for demand, positive for volumes. Maybe interest rates go down a little bit, helps out with housing. I think there are some positive signs that that seem likely to happen in 2026. Certainly, I don't have a crystal ball, or maybe given the past 4 years, my crystal ball is broken. But
or a little cloudy, maybe. Yeah.
Yeah.
Yeah. Again, there's so many drags on people out there right now, and you talked about maintenance costs, which are up as well. It's just
well, that's related to tariffs, because all the parts coming out of outside of the U.S. are tariffed at like 10 or 25%. So
yeah. Well, and then again, I'll continue to be the bad cop or the cynic here, which a role I like to play, Carter.
Yes, this is
Ashley
true.
can attest to that. But I just, I think about too, you talk about the reciprocal tariffs, if they're rescinded or, pulled back or what have you, that's going to have an effect as well. There's always this push and pull with everything that happens. And maybe when some certainty comes back into the picture, maybe things will start to, get a little bit smoother for everybody. But I hope that's the case. I hope things do kind of go that route in terms of these drags being pulled away from people. But I don't know. And maybe it's just the fact that, as you said, it's been 3 years of this, and it just feels like we're just dragging on and dragging on. It's frustrating for people out there.
Yeah. Yeah. No, trucking's a very hard job, and having to deal with this market for 3 years, I can't imagine how frustrating or challenging that would be. It's like, I guess with the positives, there are always risks. It's like does stagflation become a thing? We think that's not likely. I'd say not likely, but we view that as a lower chance than kind of the economy kind of growing, but maybe a little bit less than it would have without kind of like tariffs this year. But I do think there are just those. I keep harping on about kind of private fleets, but they did take 5% market share. That's a huge chunk. So if that is given back to for hire, and we also have capacity tightening and demand kind of stabilizing, growing a little bit, that should help rates. Maybe not. Are we going to see rates up like 30%? Probably not, but mid-single digits next year, maybe like 10% as we get into kind of Q3, Q4. I certainly think that's a possibility.
Yeah. Well, that's a great point too, that if and when, or I should say when, I shouldn't say if, when we see a recovery, unless we have, and no one wants this, unless we have some sort of pandemic or some sort of event, obviously, that pushes us there, it is going to be probably a slow recovery, right?
Yeah, I think it'll be a gradual ramp up. And I think, one thing, it's worth pointing out is I think, with trucking, with profitability where it is, even, if the EPA regulation, there's clarity on that, there's going to be a minimal pre-buy. Just nobody has the balance sheet, the cash flow to go out there and pre-buy like 50,000 trucks.
Yeah.
So, I think, that also takes away that risk of, we're, the market's starting to recover. then we have this huge, boost of capacity back in that suppresses everything. So I think kind of the lack of pre-buy or, a very small pre-buy, I think really sets up a gradual ramp, in 2026. And then I think it sets up a pretty good 27.
Now, you do a lot of research there at AC Research. What else stands out to you right now, or what else are you seeing?
Oh, see, good question. I think. Oh, sorry, caught me off guard.
No, you're fine.
Notice anything that surprises you,
Yeah.
or you think, oh, this is something worth mentioning, and then maybe there isn't anything like that,
Yeah, it's hard to find something surprising. I feel like every month in my write-ups, I continually say the same things over and over.
It does. It feels like we're in Groundhog Day to a certain extent, and I imagine you feel that more, as much as anybody out there, because you're looking at these numbers that are just kind of staying where they were, right?
Yeah. I mean, actually, if I could say something that's maybe surprising, is even though like orders and, sales, have fallen, kind of in the second half of this year, they're still like not terrible, so it's like, I think, people are still, finding a way to manage and make money. I think, it's like everything's okay-ish, nothing, from a kind of OEM perspective, it's like still rough. They've let go of a lot of people, but it's, I think like sales and things like that have kind of held up better than expected, especially given the 3-year, kind of 3 to 4 year kind of recessionary window. And surprising as that it's not as bad as it could be, which is maybe a little bleak. But
yeah, I was going to say,
could be worse.
Everything's okay-ish. I think we found the title of our show there, because everything, it's not horrible and it's not great. It's everything's okay-ish. I like that, because I think it does kind of summarize where we're at right now in a lot of ways with everything we're talking about here. And again, it's such a grind, and I don't think we can undersell that or understate that. But, and again, you talk with a lot of people. Advice for folks out there, is it just to kind of, if you can, stay the course? This will get better. We don't know exactly when, but, what are you telling people that you talk with about this recovery that we're waiting for?
Yeah, I think, kind of similar vein. I think if you can manage your way through the next couple of quarters, you will start to see signs of life, signs of relief, which doesn't make it easier, because talking to truckers, every year your insurance costs go up, your maintenance costs go up, and even if your rate goes up 2%, but inflation's running at 3%, it kind of cancels that out, to some extent. So, I do not run a trucking company, so it's hard for me to say what to do operationally. I know a lot of maybe the larger fleets we've talked to, they've started letting go of kind of back office staff and, not hiring, and, it's not easy, but, I think the thing to highlight is if you can manage through, another quarter or two, you will start to see kind of light at the end of the tunnel,
Yeah. Yeah, stay the course for sure. Carter, we know you don't have a crystal ball, but when you put all this stuff together, it does give us a good sense of, where things stand right now and where we might be headed. And it's always good to talk with you. We appreciate it. And if we don't talk to you before a year from now, actually, know what? We'll call you when the recovery happens and we can take a victory lap. How's that sound?
No, that sounds great. And thank you both for having me on. And I'm glad this call was not about the trailer industry. So.
I appreciate it. We appreciate it. And
thank you so much.
Thank you, Carter.
Yeah, thank you. Yeah, have a good day.
Thanks for listening. Today's episode of Trucking with OOIDA was brought to you by a dedicated team of people. That includes Jim Fetzer, Tennille Flick, and Kim Boren.
You can listen to new episodes and extended interviews on your favorite podcast platform and on the OOIDA YouTube page. Please subscribe while you're there. If you've got thoughts, we'd love to hear them. Call us at 1-800-324-6856 and leave a message, or send us an email to podcast@ooida.com, and we might include it on the show.